Sehr geehrte Damen und Herren, ich möchte Sie heute wieder recht herzlich grüßen hier aus Vancouver. Wir sind heute bei der Hunter Dickinson Group im Büro und ich habe bei mir Scott Cousens. Hier ist ein Partner von HDI und Director of Capital Markets. Scott, nice that you found some time for us to do a little interview. We would like to know what's behind the Hunter Dickinson Group. Can you tell us a bit more how it works? And
Sure. First of all, thank you for the opportunity. It's nice to meet you. So,
welcome.
Hunter Dickinson is probably Canada's largest private mining company. So we have about 130 full-time people in our head office here in Vancouver, and then we have specific project teams, if you will, in each of the projects that we manage around the world that are remote to Vancouver. We've been doing this now for more than 25 years. You know, we have a strong track record in the investment community, in the mining community. We're a well-known entity. There's six partners of Hunter Dickinson, and we all, one of the unique elements of our business is that each of us as individuals make investments in the public companies and private companies that we're invested in, but it's Scott Cousens' investment, Bob Dickinson's investment, and we make our money like the shareholders do. As the projects have success and the share price goes up, our families benefit directly. So we don't take big management fees out of the companies, and we're not a fee-driven business. We invest our capital. As the project is successful, so are we.
okay, so and from where do you get the money right now? Still in that bad market time what we have, do you have money still left in Vancouver, or do you get it from outside USA, outside Canada?
Yeah, no, it's a very good question, and one of the benefits of having a 25-year track record in the industry is when the commodity cycle is down and capital is hard to raise, there's only a few kind of groups of companies, if you will, that still have the relationships that are required to access capital. So last year we raised about $70 million in the capital markets for two private companies and one of our public companies. Now, it's we would prefer not to be raising money at in this type of a market, but to be able to have access to the capital market when you need it is very important. So, last year was a horrible year for the international mining community.
That's right.
And it's exactly what we expect, and we've come to expect from a market low. I've been doing this for 25 plus years. And at the bottom of the market, you always feel the same. You feel as though it's never going to get better.
Right.
Having a bit of experience with it, you know that when you start to feel that way, you probably should now be starting to allocate some capital, because you're probably not going to get any worse. And we're already seeing a nice uptick in the industry over the last 3 months. I think the blowout capitulation from a market valuation standpoint occurred in the second half of last year, and I think it's time to be looking back to the industry. There's a whole bunch of things that are setting a positive tone for the next couple of years.
Okay, you said you rose up $70 million in 2013.
Yeah.
In the bad market time, that's not bad. So, do you think? What do you think about the current market situation? What we have right now? We have the beginning of 2014. Do you think it's getting better? That we get stabilized?
I think it's a question that is answered from a number of different angles. I think from a general market perspective, I'm not as keen on the opportunity as I was during 2013. But if you're looking at our industry in particular, there's a couple of very key components. One is last year the mining industry around the world took massive write-downs of all their valuations. So the market recognized we're at the bottom. now's the time to clean up our balance sheets so that as things start to improve, all of that, those troubles are behind us. So, they took project write-downs, they re-evaluated and wrote down the value of assets within the companies. So this year, already in 2014, year-over-year earnings, year-over-year valuations on a quarterly basis are going to be considerably better than they were last year. So it starts to have a positive impact on the psychology of the investor. Secondly, there's a massive amount of money right now that has been raised in private equity funds and resource funds around the world that are looking for transactions, and they're having a struggle to get them done. So you've got all this capital that's been raised, and the fund managers are going to want to allocate it. So I think you're going to see some significant transactions this year, again, which just raises the whole profile of the industry. I think there's some M&A activity that you'll see as well. And when you look at what's happening around the world in the general economies, the IMF came out 2 days ago and increased their expectation for performance for just about all of the economies, certainly in Europe.
Yes.
It seems as though the debt crisis is behind us, and they're starting. It looks like no, exactly, but the cost of their debt is coming down. So so the markets are saying we think the worst is behind us. They increased the growth rate in the United States and Canada, and when you look at China continues to be the number one driver for the demand for commodities, and people, you hear them talking about the challenges of China only growing at 7.6 or 7.7% a year. It's still almost triple what the U.S. is growing at, and it's 7.7 on top of last year's growth. So that massive economy is getting bigger every year, and then the next year is growing by another 7% and another 7%. So it's a massive driver. And for us, when you look at where we think the biggest implications for our business is going to be is on two metals that we've had a particular focus on over the last decade, which is copper and zinc.
Okay.
We think China is going to continue to have a substantial impact on both of those metals. China's announced again another substantial increase to their power grid and the infrastructure and their rail system. So from a zinc standpoint, the galvanization process, more steel is going to be, so more zinc, is going to be required for importation into China. They imported 30% more copper last year than the year before, and we think with some of the write-downs last year in the mining industry, there is still an expectation that a lot of copper, gold, different mines are going to be developed. And I still think there are some surprises of people that are counting on certain projects to get the financing and get into production, and it's not going to happen. It may happen 3-4 years from now, but in the next, to drive valuations over the next couple of years, I still think there's going to be some surprises in the amount of metal that the mining industry won't be able to deliver to the market, and that should be very supportive of a few metal prices in particular. So we like copper. We like zinc. We like some of the specialty metals. One of our companies, Northcliffe Resources, is developing what will be probably the largest new tungsten moly project in the world here in Canada. So from a geopolitical risk, it's in a safe jurisdiction, and it's a metal that China continues to require. And it's interesting, you look at companies like Nortel, the big technology companies around the world are recognizing that they don't feel really good about where they're getting some of their metals around the world, so they're taking steps to step away from some of the more challenging places in the world, which just means that those resources that exist in North America and in Europe. So we have one of our companies, Rathdowney Resources, a substantial zinc asset in Poland. Okay. Right in the middle of that whole European market, another great, safe, growing area. Yeah. So we like to focus on particular metals to a large degree, but also parts of the world where you can actually get the metal to production, and that's a real key part of the scenario.
So that time what we have right now, you use that time to do some more due diligence about new properties, because there are a lot of properties out there that are maybe drilled out and have a resource, and I think it would be for Hunter Dickinson Group a very good time to look after them to get new projects. Is it the way I think?
You know, Stefan, you're absolutely right. One of the benefits for us at the bottom of any cycle is the opportunity to access new projects,
yes,
and get them at good prices, because the market isn't paying for quality assets at the moment. So where we're able to bring our management team, the 25 years of experience that we have operating as a group, our access to capital, there are a number of opportunities we're looking at. I would expect that we will have more acquisitions to add to our portfolio, because I think 2014 is going to be a good year, certainly much better than 2013. But hopefully. I really think 2014 sets the stage,
yes,
for 2015 through 2019 very substantial equity market again in the minerals and mining space. And now's the time to be adding some of those foundational positions, and because we'll wake up one day and you're 2 or 3 times what the price had been 3 or 4 months ago, and you miss that market bottom opportunity, and now's the time to be doing it. Yeah, right. Well, it's there's an old adage. I remember a newsletter writer back in about a year into the last cycle. He was presenting to a big crowd, and he said, "You know what?" He said, "We've seen increases of 4 to 5 times from the market lows already." So he says the easy money has been made, but he says the sure money is yet to be made. Okay. So we're just getting into a cycle where now capital is flowing again, and the opportunity to actually build real value is, it's kind of the second stage of a recovery in the cycle. So we're just starting to come off the bottom.
Okay, so that means also that it's now a safer time for the investors to come back into the market and to spend the money there.
Certainly from a valuation standpoint, there's still some what I would call kind of market blowout,
yes,
sure, kind of values out there. The most important part, in my view, to any investment is people.
Yeah.
So there's a lot of mining projects and mining companies out there that are undervalued, but they're undervalued for a reason, and there's other companies that are undervalued because they're just part of a group that's being undervalued at the moment. So do your homework.
Yes.
Invest in management teams that have had success many cycles. They've been here before. They know what it feels like. They know what it looks like. They have access to capital. The market pays attention to them. So people first, and then obviously the project. Ultimately, the project will drive the ultimate valuation.
Safety.
But I've seen so many bad people ruin good projects.
Yes.
So if you make an investment in groups and people that have done it before and have their own capital at risk, to me that's a big part of the equation. If they're driven by the same outcomes as the shareholder is, in other words, the share price has to go up for them to do well.
Sure.
To me, that's part of the thing you want to be looking for.
Sure, that's right. And what's about gold and silver?
Precious metals is always an interesting space, and our focus is base metals, so copper projects. But almost always we try and find a mix. So you get a copper silver project or a copper gold project, because there's always a component in the investment community that love the precious metals. And when you can have a combination, you just have a broader group of people and investors that will look at you. But I think over the next couple of years, I think gold and silver should do very well. There's a number of companies that based on the current gold price have lots of valuation upside just to get back to kind of where they should be valued. I'm not as convinced that gold is going to $2,000 an ounce as a lot of people are, but I think gold in a $1,200 to $1,400 trading range creates a stable and healthy gold industry around the world,
right.
And should attract some good capital to build mines and employ people.
That's right. So that's the best time to do some stock picking, I think, and we will look up all these companies what are under the umbrella from the Hunter Dickinson Group. There might be good companies there.
Yeah.
And Scott, thanks a lot for having us here to do the little interview, and we got a lot of interesting information for our viewers. So we see us next time in the office when we are back here in Vancouver. Thanks a lot.
My pleasure. Look forward to seeing you again. Thank you.
You're welcome.
Cheers.